And I tell you, I want to cover a couple things before I get into it. And it deals with what I would say, the emotions of trading. Okay. Um, as if you read my book, who's read my book? Who's read my book? The very first book, Winning the Day Trading Game. In that first chapter, I talk about 1987, and I talk about the huge loss I took and the emotional damage it did to me as a trader. It took me about 6 years to overcome it. And and so you look back on it, and if you don't learn from your past mistakes, you're due to repeat it. And one of the things that I will tell people is that trading is a very tough game. Don't think this is easy. You just, sign up and they give you money. That's not the way it works. So you have to have a process. And the reason I think the process you got to build, and everybody's a little different. There's not one process that works for everybody, but you have to have a process that allows you to objectively make your decisions. And and when I'm talking about that, you got to know where you're going to enter things. You got to know where your targets are, and if not, you get the moon effect. And I used to tell people the moon effect was it's going to the moon, never coming down. And then of course you got to know where you're wrong. If you don't know where you're wrong, there's two ways to tell. Okay, look at your account. Your account will tell you honest truth unbiasedly and tell you you're wrong. The second way that I like to use is time. I will set a time, especially when it deals with options, of a max of 72 hours. But sometimes way before that, I recognize I'm wrong because it's a totally flip of why I went long to start with. And so I think that it's a hard thing to do. Hardest thing in trading to do is take losses. Everybody knows that. I hate to take losses. How many people hate to take losses? Just hate to take it. Like there's no tomorrow. Well, the nice thing about being a trader, this is something you don't ever think about, but I think about it all the time, is I like to take a loss because it gets me closer to being right. For example, if I get out, I get unbiased, unbiased, and then I see the market clearly. You got a fog over your head when you don't have it. Okay, when you don't, when you eat a loss, you get to a point and you say to yourself, okay, let me tell you something. I'm wrong. It's okay. It's okay being wrong. It's all about staying in the game. Yeah, Kenny Rogers was a great singer, but he also had a great line. Jim just posted in here. You got to know when to hold him, and you got to know when to fold him. That's very true when it comes to trading. And
And Tom, there's that old saying, cut your losers quick and let your winners run, right?
right, exactly.
Sometimes taking a loss is the smartest thing you can do.
Oh yeah, tell me about it. Because they tend to get worse, don't they? Until they get to the point, here's what happens. You go to stage one, it went past where you want it to go. Stage two, oh, I'm gonna hold on a little longer. And then stage three, when you finally come to the realization that I got to get out of this thing, you get out, and 10 minutes later it goes up, right? That's exactly what people remember about taking losses. A lot of times it doesn't automatically go up. You tell your mind it automatically went up. Okay, and this is what I'm saying. Okay, now let's talk about today. Today, I've been giving you since last week. I gave you a number. Y'all remember the number I told you the market was going to run into resistance? I gave it to you all last week. I said I think this rally, talking about Thanksgiving week, would go to a certain number. Do y'all remember the number I gave everybody? Come on. 68.80 was the number. Now, what's special about 68.80? Chuck, tell them what's special about 68.80.
Well, what you're looking at there is the open of November. So market moving back to, we had been down below the open of November for most of the month of November. So getting back up to that number is an important point. It's an inflection point in the market. And we have to give the market some grace to see what it's going to do once it gets there.
And Chuck, what did it do? It went up there, and the people had been waiting just to break even. I call them the Seinfelds. Everybody saw that Seinfeld show that Jerry was always breaking even. He'd lose a 20, find a 20. Everybody remember that? People that have been holding those positions, just think about it. Chuck, go look on the research key. Tell me the last time we hit 68.80 and started breaking down. The date. I just need the date. Nothing in particular about just the date.
Let's see, what do we got here? So let me dashboard. Let's create a new tab here. And we'll go into, let's see, research key. And open up this one today. All right, what do we got here? E-mini S&P. You want to find the last time we were above 68.80?
Yep.
Well, that's 30-minute. Let's go over to a day.
Somebody just posted, Rod says Monday, November the 3rd.
Yeah, November 11th, we actually got to 68.80.
All right, so anyway, here's my point I'm trying to make with that statement. Can you imagine people that didn't want to take losses, all the opportunities they lost because they've been long something from 68.80 and it finally got to break even this morning and gave them a chance to get even? I want you to picture yourself going to night after misery after misery after misery as that E-mini hit 68.80 on November 11th. That's all of November, all that great trading we did last week, getting long IWM, getting long everything. They didn't participate. You know why? They were holding on 45 days roughly to get to a Seinfeld. Okay? Am I making my point here? I'm trying to make my point as nice as I can. Okay. As long as I'm making my point, because that's the way you got to think when you get a bad trade. You can give it a day, yeah, maybe even two, but at some point you got to say, let me start all over. Well, you still got money left. Okay. All right. Well, that's what I wanted to cover before we got into the slides. That's that extra stuff that you asked me for. That we're not going to do that. We're going to do it the right way. We're going to eat the ones we make mistakes. We will make mistakes. Past performance is not indicative of future results. In my opinion, the market today is negative even though it looks up. How do I know that? Because I've got a process I follow that tells me it's negative. Quite simply, I want you to see the process. There's about 8 steps of it, but we'll just do one step. Where did the QQQ open today? Somebody type that in there. Where did the QQQ open today? And the QQQ's open at 624. It's trading at what price? This is simple. 620. Is 620 above 624? No. This is not an up market. This is a market that's selling right now. And that's just one element of many things I've looked at this morning.
Yeah, Tom,
this is helping.
market kind of reached its peak right before we get to the cash open. So what we've done after the cash open is different than what we built up to that point, and that was that inflection point, that November open.
Yeah, and you got a judgment call. You got reference bars to help you from here. And we're going to enter one at 11:30 called Genesis that gives us another look, because right now we're coming down into Genesis. We're coming from the top of 3 and down we go. Okay? That's what we're doing.
As always, this is the train and trade session. We'll be here Monday through Friday. This is the 11 a.m. Eastern presentation. We're running a little bit behind, but we're going to get caught up. All trades in Train and Trade are tracked through T-Buzz Talk and Trade. Make sure you're paying attention to Telegram. It's up there, and Tom has been putting the information out there for you guys.
Yeah, and speaking of that, let me ask before we get into trading news, okay? Before we get into that, let me ask the question. Did everybody get a chance to join at our, go back to the previous slide. Did everybody get a chance to join DTItrader.com with my BOGO opportunity? You buy one, get one. If you didn't, I'll open it up during this session if you want to come in to talk and trade for BOGO, okay? Basically, you get 1 month free for paying for 1 month. So if you're outside the qualification, but if you want to get that deal, type your email in here and click that link, and we'll make sure you're classified as a BOGO this month. We've had bigger influx of people, and they're not going to leave. So I'm basically doing a BOGO as I build up. We got the biggest inrush of people we've had in months, really, until I started it. Anyway, that's T-Buzz Talk and Trade. All right, Shirley, you got to go buy it, and then we'll let Chuck copy that and make sure you got it, okay? All right, next slide down. Trading news is something that I've been doing for years. And years ago at DTI, we had an algo machine that would read the news and put us into trades on big announcements. Chuck, you remember when we used to trade oil off the oil report? Everybody in the office was participating because it was so good, okay? Everybody was participating. But trading news, train and trade. Part 1, trading news and content of news. You have the release, the reaction, the follow-up, and then people start reading the news. 3 steps to news when you have it. The release reaction happens instantly once the news is known. It's the timing, not the details of news. It's how the price reacts. You trade the release based on timing and market levels. That's the way you trade it. Follow-up, the market's response to the initial move. That's where you get the 2 paths. It comes down to a low, comes back up, and then takes out that low. Then you got to trade on the follow-up, okay? Does everybody understand what I'm talking about? You have the reaction, it makes a low or high, and then you use that low or high to go to your next step, the follow-up trade. Then people start reading the news and the real content of that news, and that's why when you see a rapid movement in the market, you need to know what news is to figure out, in your own opinion, whether or not that news has the effect it did with the reaction. There's 5 major economic reports in a month. I've talked about this all the time. This is when, if you're selling options, you need to know these dates, because the market has a tendency on these dates to move 1% or more. The non-farm payroll report, CPI, PPI, GDP, and PCE. They come out throughout the month. NFP comes out usually the first week. CPI, PPI the second midweek. GDP, PCE the last week. That's sort of the pattern these reports come out. You got to know the dates of these reports each and every month. You don't want to be surprised by these reports. These are economic reports. Now, CPI and PPI, okay? Like it says, released around mid-month, includes two main readings. Take care, reading strips out of food and energy costs, provide a clear view of underlying inflation trends. That's what they're looking for here, inflation trends. Again, 3 steps, the reaction, and then the follow-up and that. Employment situation report. This is released at the start of each month. This is the biggest one of all the news. This is the big daddy right here, the employment report. That's why the market, when the government was shut down, had a little trouble with that. A little trouble. Gross domestic product, that's at the end of the month. Updates to the quarterly report, it tells you about the economy. You got the preliminary, the revised, and the final reports. For example, the September release provides the final reading for the second quarter. And we left out one report there we need to add later, but it was the other report that comes out at the end of the month.
Yeah, I think you're talking about PCE, and of course, we're going to get our most recent reading on that tomorrow morning.
Yeah, and PCE is a big report coming out tomorrow morning. Now let's talk about the Fed. I've studied the Fed ever since the Volcker days. You go to your history books and find out when he was the Fed chairman, but when I got into the market, he was the man. So you got to ask yourself, what is the Fed pivot in the opening price? Chuck, you want to take this part? Chuck, I can't hear you.
Okay, sorry about that. So on this slide, we're looking at the FOMC pivot numbers. At the time of the FOMC announcement being released, where was the E-mini S&P futures trading? Well, back in January, 60-65 quarter is where that FOMC number was. What we're more concerned about is the most recent one, which was back in October, 69.35.50. And let me just double check that. I always want to make sure I'm giving you the best information. And it is, in fact, 69.35.50. You'll notice it's been a while since we've been up to that price. That's very near the high of the year. So the market kind of tracked down after that. Next week, we're coming up on our next FOMC pivot number. And the question is going to be, in which direction is the market moving? If we track the market based on the FOMC pivot numbers, Tom, then ever since May, we've been moving higher. But that's kind of in question right now. Are we going to have a higher FOMC pivot number in December and continue that trend that has been with us since May? So that's going to be one of the big questions we look at, because it tells us about the direction, the strength, the trend of the market. And we're not that far away from that number, and we're not that far away from that report.
And it tells you 69.35 will be the resistance point after we get above 68.80 on a closing basis. We know that information, 35 to the old high, which was 69.55, if I remember correctly. That'll be a selling zone, okay? Because you had people that bought the market there that will sell the market. That's what I mean. There'll be a resistance point. The Seinfelds will step in.
And let's see, John actually asked a great question here before we go to the Corvette trade. He asked, is the FOMC pivot number the open for the day or some other time during the day? This is the open of the hour in which the FOMC report comes out. That announcement comes out at 2 p.m. Eastern. And so we look at where the market was trading at 2 p.m. Eastern on that Fed day. That is your FOMC pivot. So, Tom, one of your favorite trades, I know, and you love to talk about this, the Corvette trade. We got a picture. By the way, how about that young Tom Busby leaning over his Corvette in that picture? That is actually Tom, mustache and all. Uh, Good look, got the shades on. And you want to tell us about this Corvette, or would you rather tell us about the Corvette trade?
Well, the only thing to know about the Corvette is that I bought it in Pensacola, Florida. I drove it back to Tinker Air Force Base in Oklahoma. It was in my garage. The house caught on fire. It went off like a Roman candle. A year after buying the car, it's the first car in history I ever got more money than I paid for it. And I always remember that about that 80 Corvette there. But the Corvette trade, it's fast, it's furious. It happens right after two. It's better to use futures for this. And it lasts about 20 minutes. I traded it, what, Chuck, for 20 plus years when I used to do live Fed meetings. And
I hate to break the news to you, but it's been longer than 20 plus years.
no, I traded the Fed meeting for 20 years publicly. I'd call a Fed meeting day and we'd have a public get together. And I traded the Corvette trade back in the day.
Yeah, I remember those days. That was a lot of fun. That was the hold on to something because this is going to be quick. And
I'd tell people don't take it, but you can watch me, and I'd show in my account and do all the stuff. But those days are behind me now. I'm teaching Futures First education. This is the trade that you make money with. It's called the Model T trade. It happens after the Fed chair starts talking. It's about a 72-hour trade. That's 3 days. And the best vehicle to trade this trade close to about 3:30 time is options. There's a lot of money made on the Model T once that trend is established. After you get the announcement, you get the Fed, bumping his jaws, and then you get all that cleared out. Then you get the trend. It's a great trend to trade, the Model T trade. Okay,
a little bit more time, a little bit more relaxing.
A lot more relaxed. You got time to put it on to the end of the day. A great time to put a trade on during that last hour, I'd call it. Powell's messed that up a lot because he talks more than he should. And you've heard me comment on that. Now, live trading with me. This is a big success. We started it. We decided to extend it through the first 3 months of what I would call next year. So the first quarter, it's not too late to join. And right now we're in a series of doing what I call Cadillac trades, the topic of education and trading. Cadillac trades are trades, just think about this, it's where I capture premium and then I let the clock tick. Okay. Next week, we'll be doing live trading with the Corvette trade, the Model T trade during live trading. And our education will be how to maximize Cadillac trade. Doesn't everybody like a trade they put on and then they get that money, they sell that premium for, they get to keep? Everybody like that? That's the Cadillac trade. If you ever hear me use the term Cadillac, it means I pretty well think all we got to do is put it on and let it go to the cemetery of those that bought it and let it, we get that premium. I like Cadillac trades. So far, I've done 2 so far, 2 trades in live trading. I'm going to do another one today. A nice, quiet ride, as Jim says, the Cadillac trade. So if you want to join me,
let's talk about that live trading, Tom, because you've got a deal here on the table. This is Q1 2026 limited enrollment. What have we got going on here?
Well, if you join today, you get December plus the first 3 months of next year. If you're a current member, you can come in at a discount because you paid me to be here. And if you want to be in the first quarter of next year with me, and by the way, we're expanding the number of people come in there. Who doesn't like to? Here's a question I like to ask people when I get to this. Who doesn't like to know consistently you show up between 1:30 and 3 and you get a live trade that you take to the bank on most cases. Now, there'll be some losses, don't get me wrong, but I'm telling you, to consistently be part of it, that's Tuesday through Friday. I do trades. I'll find a trade between 1:30 and 3 every day, Tuesday through Friday. I like doing it. We do a little education on what's pertinent at the time, and then we get that reference bar formed, and if it's offering a great opportunity, guess what we do? We take advantage of it.
Yeah, and Tom, I'm certainly looking forward to that live trading session today because the way this market is moving, it really looks like it's setting up something for the afternoon.
Well, again, I gave you the first step of being short, so today might be an interesting Cadillac trade I choose. Any questions about live trading? This is real money, real action here between 1:30 and 3 every day. All you gotta do is show up and get it. If we're passing out steaks, this is where you go to get steaks.
And it's not just about the trading, Tom. We also do a bit of educating in there while we're waiting for the market to make its move. So if you
Oh, absolutely.
want to learn a little bit more, this is a great place to go.
Let's see. Max asked the question: when do you say that we should be short? Mac, are you new? Okay. I wish if you want to be short, I wish we could relive 2022 when I was short all year from January. The market odds right now say the market's going higher. So I typically play the major trend, and the major trend go up. Neil asked, do you ever do a call Cadillac trade in a bull market? Yeah, I do, Neil. It's called an iron condor. I do it through a feature called an iron condor. Go check all your profits that you made in iron condors with me. Then you see, oh, he does both.
And Tom, it's worth pointing out for those of you who are here in this presentation, one of the first things Tom talked about this morning was how this market looked a little bit weak. And when you go through and look, where were we when this session started? About 68.56. Where are we trading now? 68.55. So we've seen the market, especially.
Yeah, hold on. Max asked a great question. I hate to interrupt with Chuck. No, what I said, you wouldn't be long. I should have said that clearer, Mac. You would not be long when the S&P or when the QQQ is at below the 622 and a half. Okay. In other words, you're not a buyer right now. But I also said we got Genesis, which is the reference bar Y that happens between 11:30 and 12, and maybe Chuck can post it's free. It's our white papers back. You seem like you're going to be a great student. Read this. It's totally free. It gives you the whole framework. Okay. What's your experience level, Mac? How long you been trading? There's the white papers for you.
Yeah, we'll definitely get more discussion about how to use that, Tom, during the live trading, because I know that's going to be a big part of that as we set up reference bars.
Yeah, and see, Mac, we give you something's worth a lot of money. Well, have you been making money, Mac? Let me ask that question. Been trading for 10 years. You never heard this stuff, huh? You learn what I teach you, you'll make a lot more money than you did. I can promise you that, because I got Jim. Jim's been trading 35 years. And Jim, You've been trading 35 years. Tell Mac what it looks like once you really learn how to milk this cow we call the market. Jim posted a statement in here. He's out of California, but a very experienced trader, but he's improved. David's here. He's an experienced trader. People learn and get better. David's been trading 35 years, and he's here every day listening to me, so I must have something good to say. I've learned more from Tom during the past few years than I learned in my first 30 years. Copy and let old Mac see that. That'll give you some encouragement. Now, Jim's enrolled in my programs, Mac. You can't stand there on the bench. You got to get involved. Get in that live trading. Click that link and join. All right, what else you got, Chuck? We're going to play a tape, or what are we going to do?
Yeah, I believe we've got a tape to be played.
And then we got a master class for Anchor at 12:30. Take it away, Chuck.
All right. And let's see, as far as playing that tape, I think I'm going to let either Jonathan or Adam pop in and get that running. And we'll see you guys for the Anchor trade and then again for live trading. So we got a couple sessions left today and got a great market to go with it. So you guys hang in there. Thanks for attending today, and we'll see you later this afternoon.